Hey guys, BTC Kyle here. For today's video, I wanted to focus on charts and the basics of charts. So if you're someone who's intermediate or someone who's more on the expert level, this video is not for you. This video is designed for the beginner just getting started trading Bitcoin or alternative currencies or even other like stocks or assets. This video could be applied to either. So without further ado, let's get right into it. The first thing I wanted to focus on was candlestick charts, right? So on my screen here, I have a chart of Bitcoin versus the US dollar. And you see a bunch of red and green and some other lines on here. And at first, for the beginner, it might be a little difficult to decipher. How do these candlesticks actually work? What do they mean? And how to kind of predict what the next candlestick might be. So this is the chart over a week, right? So this is the first thing that I want to show you, which is the time frame. How do you define the time frame? So we're on bitcoinwisdom.com. It's a great free charting tool. You can go to it, search it in Google, type it right in. But the time interval here is telling you what is the width of each candlestick, okay? So if I zoom in here, we have one candle here that's green. And then we have another candle here, another candle here, and another candle here. This one happens to be red. But the width of each candle is determined by the time interval here, okay? So within this candlestick here, from left to right, that just shows that it was within that week of a time frame. If we wanted to narrow down more into an intraday or intraday level, we would click the 1 hour. So you tell me in your head, if I click the 1 hour, what does that mean? Well, it means that each candlestick width is an hour. So instead of it being a week, it's now an hour, okay? Now we can actually tell what these candlesticks actually mean. So going in here, we can see that Bitcoin's actually making a nice bull run right now, nice bull flag. When you hear the terminology bull flag, usually you see like a big flagpole and then you start seeing a consolidation, like a waving of a flag. But that's for another charting class. But for here, I wanted to teach you what these candlesticks actually mean. And it's pretty easy once you kind of visualize it here. So we can start off with this big green candle, okay? So you have the bottom of the candle, you have the top of the candle, and you have a wick, right? And that, obviously, you have a candle and a wick, right? Or the wax and the wick. Anyways, the wick here is that determines the range from which the price fluctuated within that time period, okay? So you might not only have a wick above the candle, but you actually might have a wick below the candle. But in this particular candle here, we had a price that opened, okay? It opens here. It opens at 6:16. So within this hour, hour 11, right? It opened at, I'm sorry, this is hour 0. On hour 0, it opened at 6:16. Okay, and within that same hour, it hit all the way up to $635. Okay, but at the end of the hour, it closed. It closed at 629.67 cents. Okay, so you can see that the price varied within that time period, but it closed lower than its maximum during that time period, okay? And if you saw a wick go down here below the candle, that would mean that the price had opened at this point and then actually went lower. But the candle would remain green if you see the price close higher than what it opened at, Does that kind of make sense? If you have any questions, please leave a comment below and I'll try to answer them as best as possible. So let's move on to the next stick. So we had a closing price here at 629, and that corresponds to an open time for the new hour. So this would be hour 1. So this was hour 0, this is hour 1. So we saw an open price at 629, but it's a red candle. Why is it red? Well, the price never actually went higher than 629 within this hour. It actually went lower, and it went as low as $623. But it didn't close. It didn't close at 623. It actually closed at 624. So again, the price varied within that time frame, but it only ended up closing at 624, even though it went down to 623. And then you can kind of understand the next candle here. Since it closed at 624, it opens at 624. It goes all the way up to 627, and then it closed at that point. Okay? So that's the general idea of candlesticks. And you can apply these candlesticks go down to the 1 minute. You can see how there's kind of like less data within that time frame. If you see a candlestick that was red, but there was no actual like length to the candle, that means that someone sold, but it never fluctuated the price. If you see a point that was green like that little flat line, that means someone bought, but it didn't really affect the price at all. It was just stagnant. And you see a lot of that within like the 1 minute charts. Not a lot of people trade within the 1 minute time period unless you're trying to anticipate a breakout. Okay. So the 1 hour here, again, you can go, we looked at the week before, right? Which that shows you the entire history. But you can go to like a 1 day, and you can visualize different patterns that way. And what I like to use personally is the 1 hour, and you can trade interweekly, or you can go to like the 30-minute chart and trade intraday. Okay, it just depends on what type of situation you're in at the time. And yeah, so that pretty much concludes candlesticks. This is going to be part 1 to charting basics. So guys, if you like this video, give me a like. If you dislike the video, give me a dislike. But if you dislike the video, make sure you put a comment below. Tell me why you disliked it, and maybe I can improve for next time. But yeah, as always, make the best trade and have a great day.